So, Amazon is firing people because of an expected economic slowdown and because of the effects of inflation on the economy. Should you be worried? In the past month, November 8, 2023, Amazon begins cutting jobs in its music streaming unit, affecting employees in Latin America, North America, and Europe. The company has not disclosed the exact number of layoffs. November 13, 2023, Amazon cuts more than 180 jobs in its gaming division, shutting down parts of the business that focus on streaming and supporting third-party games. November 17, 2023, Amazon plans to eliminate 9,000 more jobs in the next few weeks, bringing the total number of layoffs in 2023 to 27,000. Well, there are headwinds, but what has Amazon done during the most recent economic downturn during the pandemic? According to eMarketer, Amazon's share of the U.S. online retail market increased from 37.9% in 2019 to 44.8% in 2022. This represents a significant increase in market share. The pandemic led to a surge in online shopping, as people were forced to stay home and avoid public places. Amazon was well positioned to capitalize on this trend, as it has a large and well-established e-commerce infrastructure. Here is a table showing Amazon's share of the U.S. online retail market before and after the COVID-19 pandemic. As you can see, Amazon's share of the market has increased steadily in recent years. This trend is likely to continue, as e-commerce continues to grow in popularity. It is important to note that the COVID-19 pandemic is not the only factor that has contributed to Amazon's growth. The company has also been successful in expanding into new markets and product categories, and it has been investing heavily in innovation and technology. These factors have all helped Amazon to maintain its competitive edge and to continue to grow its market share and stock price. In fact, did you know that the 7 largest stocks in the S&P 500, which includes Amazon, have returned 92% on average this year? And the rest of the S&P? Let's now talk about it. If your portfolio has increased this year, it's probably thanks to the Magnificent Seven. These are the Herculean stocks holding up the S&P 500, Alphabet, Amazon, yes, the company that we are talking about, Amazon, Apple, Meta Platforms, Microsoft, Nvidia, and Tesla. So these tech stocks, including Amazon, must be doing something right. Right? Amazon is well positioned to benefit from this growth, as it has a strong brand reputation, a wide selection of products, and a convenient shopping experience. Now, let's talk some numbers. Amazon's revenue has grown at a CAGR of 25% over the past 10 years, and it's expected to continue growing at a healthy pace of 15 to 20% in the coming years. Its net income has also been steadily increasing, reaching a staggering $33.3 billion in 2022. Here is the latest information about Amazon's AMZN stock price and financial details from the last quarter. As of closing on November 20, 2023, Amazon's AMZN stock price is $142.83. The 52-week range of the stock is $81.43 to $147.29. The stock's price-to-earnings (PE) ratio is 72.59. Balance sheet. As of September 30, 2023, Amazon had $537.4 billion in cash and equivalents. The company's total assets were $485.8 billion. The company's total liabilities were $326.6 billion. The company's total equity was $159.2 billion. The information from the latest income statement for Amazon, AMZN, in the last quarter, which was the third quarter of 2023. Cash and cash equivalents, as of September 30, 2023, $537.4 billion. The latest analysts buy, sell, hold ratings for Amazon, AMZN, stock. Brian Novak of Morgan Stanley rates it a buy with a positive outlook for Amazon. We continue to believe Amazon is best positioned to benefit from high e-commerce adoption and the shift to cloud computing. Target price of $230. Mark Mahaney of Evercore ISI rates it a buy. Amazon remains one of the best growth stories in tech, with consistent 20% plus revenue growth and margin expansion potential. Target price of $200. Brent Hill of Jefferies rates it a buy. Amazon is a core holding for any growth-oriented portfolio, given its diversified revenue streams and strong competitive moats. Target price of $190. Justin Post of Bank of America rates it a buy. Amazon is well positioned for the holiday season, with strong Prime membership growth, expanded fulfillment capacity, and increased online shopping demand. Target price of $185. Yusuf Squali of Truist Securities rates it a buy. Amazon remains a top pick for us, as we believe it is a beneficiary of the accelerated shift to online retail and cloud services amid the pandemic. Target price of $180. Heath Terry of Goldman Sachs rates it a buy. We believe Amazon represents the best risk-reward in internet given the relatively early-stage shift of workloads to the cloud, the transition of traditional retail online, and share gains in its advertising business. Target price of $170. Barton Crockett of Rosenblatt Securities rates it a buy. Amazon's rising retail profitability and AWS growth is a comprehensive buy, target rate of $185. Finally, the Wall Street analysts from TipRanks rate it a strong buy. Amazon has a consensus rating of strong buy based on 42 buy ratings, 1 hold rating, and 0 sell ratings, with a target rate of $175.81. Just to get some contrarian views, which are hard to find. David Trainer of New Constructs rates it a sell, saying that Amazon's valuation implies that it will be more profitable than Walmart, Costco, Home Depot, and Target combined. He has a target of $116. And Scott Mushkin of R5 Capital rates it a hold, saying that, we believe Amazon faces increasing competition and margin pressure in its core e-commerce business. He has a target of $140. Now what is Amazon all about today? Part of the technology stock strategy has been its diversification. It's more than the online bookstore it started out as and more than the online e-commerce juggernaut it is known for today. Here's a list of each business that Amazon is now involved in with a short description of each. Retail. Amazon.com, online marketplace for books, electronics, apparel, home goods, and more. Amazon Marketplace, a platform where third-party sellers can list and sell their products on Amazon.com. Whole Foods Market, high-end grocery store chain acquired by Amazon in 2017. Amazon Go, grocery store chain with cashierless checkout technology. Amazon Fresh, grocery delivery service. Amazon Pantry, non-perishable grocery delivery service. Amazon Prime Now, 2-hour grocery delivery service. Cloud computing. Amazon Web Services, AWS, the world's leading provider of cloud computing services. It also includes an object storage service, an elastic compute cloud service, a serverless computing service, database services, and a content delivery network, CDN. Digital content. Amazon Prime Video, streaming video service. Amazon Music, streaming music service. Amazon Audible, audiobook service. Amazon Kindle, line of e-readers and tablets. Amazon Alexa, voice assistant. Twitch, online video game streaming service. Goodreads, social cataloging website for books. Amazon Robotics, developer of robotics technology for warehouses. Amazon Studios, producer of movies and television shows. Amazon Advertising, advertising platform. Amazon Business, marketplace for business supplies. Amazon Pay, digital payment service. Amazon Logistics, delivery and logistics company. Amazon Prime Air, drone delivery service. Amazon is constantly expanding into new businesses, so this list of businesses is not exhaustive. However, it gives you a good overview of the wide range of businesses that Amazon is now involved in. And it goes on. In the last few months, Amazon is set to sell Hyundai vehicles online in the US starting in 2024. The agreement is an expansion of a deal announced 2 years ago to expand Hyundai's digital showroom on Amazon.com. Amazon has successfully launched all 9 of its Project Kuiper satellites. The satellites will provide internet access to people in rural and underserved areas. Amazon has announced 3 new Alexa features to help people with grocery shopping. Amazon Robotics has unveiled a new robot called Titan that will be used in its fulfillment centers. Titan is designed to handle large and heavy items, such as appliances and furniture. There is slated to be a new Amazon Prime benefit, One Medical healthcare for $9 a month. One Medical is a primary care provider that offers a variety of services, including in-person and virtual visits. Amazon remains a profitable company with a strong balance sheet. The company is also well positioned to benefit from the continued growth of e-commerce and cloud computing. However, the recent job cuts suggest that Amazon is taking a more cautious approach to growth in the current economic environment. The concerns regarding Amazon stock in the near future include 1. Economic slowdown. The U.S. economy is facing a number of headwinds, including rising inflation, interest rates, and geopolitical tensions. These factors could lead to a slowdown in consumer spending, which would hurt Amazon's retail business. 2. Increased competition. Amazon faces increasing competition from a number of rivals, including Walmart, Target, and Shopify. These companies are investing heavily in their e-commerce businesses, and they are making it more difficult for Amazon to maintain its market share. 3. Regulatory scrutiny. Amazon is facing increased scrutiny from regulators around the world. The company is being investigated for potential antitrust violations, and it is facing new regulations in areas such as data privacy and labor practices. These regulatory challenges could increase Amazon's costs and make it more difficult for the company to operate. 4. Valuation. Amazon stock is currently trading at a high valuation, with a forward price to earnings (PE) ratio of 43.29. This valuation could be vulnerable to a correction if Amazon's earnings growth slows down. Despite these concerns, Amazon is well positioned to benefit from the continued growth of e-commerce and cloud computing. Its strengths are its diversification into a number of different areas, including advertising, digital media, and logistics. This diversification has helped to make the company more resilient to downturns in any one industry. Another strength is its innovation. Amazon is a highly innovative company that is constantly investing in new products and services. This innovation has helped to keep Amazon ahead of the competition and has driven growth in its business. The company's strong financial performance, expanding market share, diversification, innovation, and long-term growth prospects have all contributed to its resiliency. It has maintained a strong balance sheet with ample cash flow. This financial strength will allow the company to weather an economic downturn and invest in its future growth. Amazon's operational efficiency and its ability to scale is one of its key strengths. The company has a number of factors that make it easy to scale, including a large and well-established infrastructure. Amazon has a massive global infrastructure of data centers, warehouses, and logistics networks. This gives the company the capacity to handle a large amount of traffic and to quickly expand into new markets. A flexible and scalable technology platform. Amazon's technology platform is designed to be flexible and scalable. This allows the company to quickly add new features and capabilities, and to adapt to changing customer needs. Amazon is the world's largest online retailer, selling a wide variety of products, including books, electronics, clothing, and home goods. But the fact is that Amazon makes the majority of its profit from its Amazon Web Services, AWS, division. In 2022, AWS generated $62.1 billion in revenue and $18.5 billion in operating profit, accounting for most of Amazon's total operating profit. This makes AWS Amazon's most profitable segment by a wide margin. AWS is a cloud computing platform that provides a wide range of services, including compute, storage, networking, database, analytics, and machine learning. AWS is used by businesses of all sizes to run their applications and data in the cloud. Amazon's success in the cloud computing market is due to a number of factors, including its early entry into the market, its broad range of services, its competitive pricing, and its strong focus on customer satisfaction. Here is a breakdown of Amazon's revenue and operating profit by segment in 2022. As you can see, AWS generated more revenue and operating profit than any other segment in 2022. AWS is a key driver of Amazon's growth and profitability, and it is expected to continue to be a major source of revenue and profit for the company in the years to come. Amazon has a strong brand reputation and customer loyalty. It has a diversified business model with multiple revenue streams, a strong financial position with ample cash flow, a proven track record of innovation and growth, and a large and well-established infrastructure. Amazon is a strong company with a bright future over the long term. The company has a number of strengths that will help it to continue to grow and succeed even if it also faces the challenge of the current economic climate as well as that of the scrutiny of regulators. The stock currently trades at a price-to-sales multiple of 2.7, which is below the 10-year historical average. As for an economic slowdown, people shop at the least expensive place, and on September 26, 2023, a Profitero study came out showing Amazon is the lowest-priced U.S. retailer, according to them. The study compared prices for a basket of goods across 104 major retailers. The Black Friday promotion is ongoing, and 167 million Americans have an Amazon Prime subscription. Snapchat has a new agreement that allows users to shop Amazon Snapchat ads and check out with Amazon without leaving the social media app. And last week, Meta debuted a similar feature that lets Facebook and Instagram users link their accounts to Amazon to more easily purchase goods within the apps. It's continuing to move forward. So what should you do? This is my first video. Please subscribe and press the like button if you have received value and to encourage me to make more videos about companies that you are interested in.